Good morning, everyone. Marlene Gonzalez with Canvas Real Estate, and today I have the pleasure of having Austin in the house. Austin Palacios from First Origin Mortgage Lenders. There's a lot of buzz going around with these changes that are coming into effect with the NAR legal settlement. So we all have to be prepared to do business with the new norm, if I may say. And that includes mortgages, right?
Right.
So today, Austin is going to speak with you about the down payment assistance programs that are available to your clients. And at the same time, how the buyers,
How we can finance your compensation, stuff like that, and
okay.
all that good stuff.
So when a buyer signs now an exclusive buyer's brokerage agreement, they're going to know that they have to compensate you for your time because you're going to explain to them your added value and why they should work with you as opposed to someone else. So if that percentage is 3, 4, 2, whatever, you come to an agreement with that buyer, and it is not compensated through a concession or an incentive from the seller, then the buyer is the one that will owe that money, and mortgages now will allow them to finance it. So I'm going to leave the floor here to Austin, and Austin's going to explain how that will go about.
Yeah.
So very, very interesting. Okay. I leave
Alrighty.
the floor to Austin.
Alrighty, guys. Good morning. Hope everybody's having a fantastic and beautiful morning. I know these changes are a little scary and all that good stuff, but man, I know you guys are strong. You guys are gonna persevere. I know Marlene has done a great job here training you guys up, and you guys just have a fantastic team behind you to get you through this, right? So the main thing that about putting your compensation into these mortgages is it affects a little bit of the DTI, right? So we do have to leave a little bit of space in these approvals to, prevent, like an approval from falling through.
DTI,
Right.
what is DTI again?
Debt to income ratio, right? So for example, for a conventional loan, the front end is 45 and the back end is 50. For FHA, it's 46.99 and it's 56.99 in the back, right? So all that good stuff needs to be played with when we have to finance your broker compensation. And I will say, I think it was a few months back that FHA, Freddie Mac, and Fannie Mae all allow it. Because beforehand, they did not allow us to finance the broker compensation into the loan. Now they changed that with the new rules. They found that obviously it's going to be a little bit more difficult for buyers agents to get their compensation. But, we're going to make it happen for you guys, of course. So whatever you guys agree to on that buyer brokers agreement, please, as soon as you sign that, send it over to us. And then we'll try to take into account, an extra percentage or whatever it may be, to make sure you guys get paid because your time is valuable, right? And you guys deserve to be paid on every level. Okay.
Now, this will work, for example, if for whatever reason, the listing agent indicates that the seller's not cooperating.
Yeah.
Right? Now, if the seller is cooperating, I'm just throwing a number out there because as you know, compensation is never set. It's always negotiable. Okay.
Right.
Let's say that the exclusive buyer's brokerage agreement says 3%, but they're only, the buyer's broker is only going to get compensated, or there's a concession to the buyer that they could use to offset that 2%. What happens with that 1%? Can that 1% be factored into it as well?
Yeah,
Okay.
so that's a perfect example. That's exactly what I was getting to. So they'll match your 2%, and then you're left over with that extra 1%. And you're asking yourself, damn, like, am I not worth that extra 1%? Yes, you are. I promise you are. We're gonna be able to finance that extra 1% to the loan. That's what I'm saying when we need to leave a little bit of DTI space, that extra $5,000, whatever it may be, right? We will get that into the loan and and make sure you get paid for that. Okay.
And if you really think about it, let's say you're talking about a scenario of a 1%. It's not that much when you put it in a mortgage as
No,
to
it's
what
not.
it relates to monthly payments, correct?
No, it's not. It really isn't. It's not gonna add like $200, like something crazy like that. Like maybe like 25, 50, But it's like little stuff. I mean, it's better than paying the full 5 grand up front. It's always better
Of
because
course.
at the end of the day, your savings per year, as long as your savings make sense and it's not more than the broker compensation that they're missing out on, then it's fine. You know what I mean?
Right.
So as long as it makes sense, right? That's the biggest thing. And there's always room to refinance in the future too. I don't know if you guys have seen the rates nowadays, but our rates on the community program for a conventional loan touch the fives already. And that's with the small rate cuts that they've done. Now the Fed is trying to do more rate cuts coming up. They did talk about September. It's going to be between 25 and 50 bips. And bips are like the percentages that the rates will go down. It's like 0.50, stuff like that.
Mhm.
And then they are talking about another 0.25 towards December. So hopefully every single rate out there is going to be in the fives because for sure VA is in the fives. FHA is already in the fives. And then conventional already is touching the fives too. And the one that's actually touching the fives, I will say to be quite transparent, is our community program. Our community program is a program that is really valuable in South Florida because everybody in basically everybody's like Hispanic or, some type of ethnicity that is not, that is not a majority, which is like white. And, because of that community program and it fits so well in South Florida, everybody can get into the fives if they have a amazing credit score.
Okay, when you say community program,
Mhm.
is this something that is funded by the county, the city, the state? And I would imagine there's different types of community programs,
Right.
right?
So it's actually funded by us directly, right? So it's property address based. So what we do is we have a system that has little like blockouts in certain areas. Like for example, if you put Miami Beach towards the beach, you're not going to get that because that's a luxury area. It's a high income area. But if you do like Homestead, Miami Lakes, Pembroke Pines, that's all going to hit for a community program.
Mm.
And the difference is in rates is crazy because you're gonna be saving probably like 300, $400 a month just because you're in the community program versus a regular conventional loan, which other lenders are doing, right? So it's important to see, well, on our end, to see where that property lies. So that's why I may ask you like, hey, whenever you get a property, let me price it out for you immediately because I will make sure it's in that community program before you get into it, right? Because I have buyers come to me sometimes like, "Hey, like I want my payment to fit into like this little circle." Right? And I want to make that happen for that person and find them their dream home at the same time. So what I try to do is I try to make sure I get that listing that they love, make sure it fits into that payment plan because it's in that community program, and then we make their dreams come true with that, right? And also community programs work with refinances as well. So I mean, all these guys that closed last year and that are in the sevens and stuff like that, and they've done their taxes, they can go community program. They even do we even do 1%, 1%, I'm sorry, 1 year tax returns with the community program as well. You just have to be in business for 5 years, right? Um but yeah, that's basically it for the community program, and it's one to really utilize because there's no other conventional program out there that's gonna touch the fives. I promise you. I promise you. I promise you. You can look everywhere. Go to your bank. Go to the lenders. I promise you, they will not touch it. Okay. Um, Going into more down payment assistance options, there's plenty to choose from still. There's about 30 million left in Hometown Heroes. As of last week, it was like 37.5 million left. So the money's going quick. So that's going to be a little harder for us to, get you in there unless you guys give us a contract right now and then we submit it, to secure the money. Because as soon as it's submitted and locked in, that's when your money is secured, right? And for Hopetown Heroes too, there's no extensions and you have to close within 30 days, right? So if your appraisal goes wrong and all that stuff, we got to be on top of it and handle it immediately. So like, and I myself, just me myself have closed like 7 Hometown Heroes deals and I had a couple with the, FHA, in which they're a little bit more strict with on the appraisals, and, we had to get on that. Like, I even went out to the property and tried to help out fixing the property, so
To make sure it
yeah.
qualified,
Yeah,
huh?
yeah, so because when your appraisal is, subject to, you gotta have the appraiser go out there again and stuff like that. So, I went out there, helped them out, painting and stuff, and then the appraiser came out there again, and it was all good. So,
Question, if somebody gets one of these community programs or hometown heroes, for
mhm.
example, can they still also build in the buyer's broker
Yeah,
compensation
so
to the loan?
yeah, so we just have to leave. Remember, the DTI is definitely the biggest part in it because obviously, if we go over that DTI threshold and we don't get an approval with our DU,
Mhm.
it's not gonna work, right? But as long as there's room, we can make it happen. Okay. Um, and with these down payment assistance programs, they are a little bit more strict though, you know.
Okay,
So I haven't confirmed if they're gonna let us do it for all the down payment assistance, but for half of them, I know for sure they do, right? And the community program for sure, because that's not really a down payment assistance program. It's just a type of conventional loan.
yeah. Well, now, it's very important to have a buyer's consultation at first
Yeah.
with the client, and I happen to think that that buyer's consultation should come hand in hand with bringing in the lender
Mhm.
to that conversation.
Absolutely.
Okay, because that way you're not setting false expectations for the clients.
Mhm.
And you're able to see what their wish list is, the areas they're considering to purchase, and whether or not they have a program, which I'm sure First Origin Mortgage Lenders does, to suit that need.
Absolutely.
So when you start doing your research, you're doing your research with something that's going to be probable.
Mhm.
And they're not going to fall in love with the property and then realize that they can't afford it, or they didn't qualify for the different programs, so on and
Right.
so forth. So in that regard, what sets First Origin Mortgage Lenders apart from other lenders? How do you help our agents close that gap and get them out there to showing properties and hopefully going under contract?
Yeah, absolutely. Look, our service is second to none, and I will tell you why, right?
Mhm.
We are here to grab you by the hand and your client, and we'll take you from A to Z the whole way. We'll take you to the finish line, okay? And I'll be on the phone with you. I'll talk to you every day. I mean, you can ask agents that have worked with me already in the past. I'll be there for you every day. I'm there for you on the weekends, holidays. I could be in Antarctica and I'll still pick up the phone, I promise you.
And he
So
did. He was on a cruise with the family for like 12 days, and I can't believe it. He was answering questions that we were sending him through WhatsApp all the time.
yeah, I make it happen, and I like to keep our reputation great because I love my job and I love you guys. I want to make the deals happen all the time, so that I take pride in what I do. So
Right. So you're available to speak with a client over the phone, or
absolutely.
if it warrants it, they could set up a meeting
Hmm.
where you could have the buyer's consultation along with the lending aspect of it to make sure everybody's ready. But I know you go a step above. I've seen you at different open houses, for example.
Yes, I have.
So what do you do to help our agents sell those listings?
Yeah, so I go out there, I offer my services. I help put up the signs. I help decorate. I help clean if needed. I'll bring waters, whatever you need me to bring. Let me bring donuts, pastelitos. I don't know what you guys. Some guys have styles. Like Iyala had the beautiful charcuterie tray. Um, Jose Navarro did the donuts and stuff,
And
and
we
and
do chocolate chip cookies
those
here
are
in the office.
those are actually my favorite too.
Yes.
I'm not a cake guy, but definitely a cookie cake guy.
Okay, so you get to have two before you leave. Anyway,
But yeah, man. I love helping you guys out. I'll be there for you guys whenever. Consultations on the weekends, I do those too, no problem. If you want to do an in-person one, that's fine. Just let me know beforehand Just try not to drop it on me like the day of, because I have like other meetings and stuff, but I'll make the time for you. No problem. Okay.
We know a lot of times a buyer will come in with their own lender in mind, or they have a relationship
Mhm.
with another lender, but you could still reach out to Austin.
Puede
We
hablar, porque yo no me están
plenty of
oyendo.
times. Hello?
Sí, me están oyendo.
Oh, okay. I think somebody's speaking in the back. Please mute
Hi,
your
Magali.
computer.
Hi, how are you?
Good, and you?
Who's
Sorry
that?
about the
Magali.
interruption.
Oh, Magali. Yes, hi, Magali.
Sorry. I'm
It's
gonna mute
okay,
myself.
it's okay. Now I lost my train of thought. You see what happens? Little senior moments.
No. We're talking about trying to help out with the clients and
Yes, even if they have another lender of choice, you should bring in our preferred in-house lender, First Origin Mortgage Lenders, because I'm telling you, more than one occasion, the client has decided to switch over.
Yep.
Because of the communication, because of the programs, because of the interest rates. I mean, First Origin, and why don't you give us a little bit of a tidbit? What do you think sets you guys apart? Because you're not a mortgage broker, you're an actual
A
lender,
lender.
and you're based right here in Miami-Dade.
We are. So we actually lend our own money, right? For conventional VA, FHA, all that good stuff, right? And that's what makes us cheaper. We're a low margin lender. What does that mean? That means we will make less so the buyer can save more and stick with us, right? So we earn, not get, we earn clients all the time, right? So we beat out banks like Chase. We beat out Wells Fargo. We beat out other lenders all the time. An example, that's the most recent, actually, Jose Navarro had a lender from up there, right? And we were going back and forth, and I was matching and beating him every time. And then we ended up beating them in the end, and then we didn't end up closing it because they're already too far into the process, but that's how me and Jose really got connected.
Right.
And now I did the whole open house for him, and then we're actually on a client right now together, working with that too. So
Okay.
definitely we earn all of our clients, and we're nitty gritty. We'll beat out everybody's rate. So
It's funny you say that. You make it happen one way or the other, and I get to see all the closings in the office, and sometimes I am like shocked when I see the closing costs that a lender like points up front, prepaids. I mean, there was a closing the other day that just on the lender side, the closing costs were almost $30,000. I went back and I dissected that Alta settlement statement, and I said, no, there must be a mistake. 30,000 is what they should have paid in total.
this guy's
No,
arm and a leg.
they charged an arm and a leg to hold the rate, to do the mortgage, to extend it because there was a delay in closing. I mean, the points were like almost 6%. I was like in shock. And we did try to convince that customer to look at another option, but they, for some reason, wanted to continue with that lender. We closed it, but I felt bad for the buyer at the end of the day, if
Yeah.
you really think of it. But it is what it is, I guess.
It is. I mean, sometimes, man, you want to help the customer so much, but sometimes they just can't be helped.
Right.
It's sad sometimes, but it is what it is.
I don't want to put you up against the wall, but an origination point, for example.
Yeah.
Okay, an origination point, what would be something acceptable to a lender?
Like
1 point, 1.5, 2 points?
I mean, for a normal loan, like FHA, conventional, stuff like that, like max of 1.5, I would say. Like, I stick with 1, most of the time, but I know, some of these higher end lenders will go to 2.
Yeah,
like
and I've
2.5.
seen 2.5.
Yeah.
So when you see a loan estimate and there's anything above 1 or 1.5 in origination points for your client, that's a red flag.
Yeah.
That's the moment you should be reaching out and maybe offering another alternative to that client as well. Even if at the end of the day, they don't work with us, but at least you have brought forth someone that is experienced in that field and could compare apples to apples. And
Yeah.
I'm sure a client will appreciate that you bring in our in-house lender, obviously, to compare this.
Absolutely. And look, to make it nice and easy for you, in the terms of competition and seeing, if he can get more savings, all you have to do is give us the credit score they use and the loan estimate. And then I'll tell you on the spot, I'll literally match line for line all the fees and stuff like that. And I will give you our estimate and you can compare it to theirs. Super simple. I don't have to have all the documents. I don't have to have nothing. I just need their approval with the loan estimate, just a loan estimate. I don't even need the whole like 1003, like,
Right.
like the application and stuff like that. I just need the loan estimate and I will literally show you like, hey, this is where he's charging you more. This is what he's doing here. I don't know why he's charging you this much here. This lender credit is kind of fake because he's getting it in the rate. So he's giving you a higher rate and giving you credit and stuff like that. Like it's the little things that I can see that it's hard for a buyer to see. And I catch them so many times because like I said, we earn our customers because we are cheaper and we are just better serviced.
Right. It's funny you say that. I call those fluff fees,
Mhm.
that they're given different names. And at the end of the day, it's all to put money more in their pockets as
Absolutely.
opposed to making the customer happy. And then the customer will refer additional business to the realtor and to yourself, so on and so forth. Well, I know it makes a difference, and since we started using you here as our preferred lender, First
Mhm.
Origin Mortgage Lenders, it has made a difference with our agents because you have that rapport, you're supporting their efforts, promoting their listings, and that you're available almost 24/7 because you
Yeah.
gotta sleep a little bit.
Yeah, it's like 30 minutes.
30
something like
minutes. Well, he's
that.
young, he can do that.
Yeah.
He could go without much sleep and he's ready to go the next morning.
Yeah.
Doesn't really matter.
Absolutely.
Okay.
And I will say, we are a lot better on condos. Our condo list has grown substantially. I think in the last like 6, 7 months, our condo approval list has gone up like 20%, 25%. For Fannie Mae, of course, not FHA. FHA is still like the same for that's been
Right.
approved since
When you
2000.
say
whatever.
Fannie Mae, that would be somebody financing convention,
Conventional 5% down, correct?
5% down. But then if the association doesn't have enough reserves,
Yeah,
then they
you have
gotta
to-
go up to 25%.
Correct.
So in other words, the lesson to be learned here about that is if somebody is considering to buy a condo and they want to go conventional, to first check with you
Yep.
to see if they are a
An approved condo, right?
approved condo, but conventional,
Mhm.
minimum 5%.
And we do have a list, right? If you send me an email, I'll be happy to send you our most updated condo list. It gets updated on I think it's like the 16th of every month. So we'll be able to put it together for you and send it out to you.
Oh, interesting. Why don't you forward that to me and I'm
Mhm.
gonna share it with everybody in the
Yeah,
office
absolutely.
because there's still a misconception that there is no financing for condos, but it relates to FHA, obviously.
Yeah, for FHA.
And then, of
FHA.
course, the reserves, the famous
The
reserves.
reserves.
I think it's gonna come to a point that they're gonna have enough reserves and hopefully these assessments will go away and condo fees or condo association fees are gonna go back to acceptable norms.
Yeah.
Because it's really hurting a lot of people.
No, and I agree with you 100%. I've seen the increase in how easy it is to close a condo. It's getting easier and easier because more of these condos have the reserves, the 10%. They have the master insurance. Now, the 100% co-insurance is still a little problem with the most insurance companies, but it has been a lot easier. Like the percentage of condos that we've closed now versus at the end of last year when it was all really like falling into shambles and stuff like
Right.
that. It's been ridiculous.
Can you enlighten us as far as the condo insurance and the co-insurance? What is the difference between that?
Yeah, absolutely. So you have your deductible of like 5%, right? It'll say at the bottom of 5% hurricane deductible or 3%, whatever it may be, right? It needs to be 5% though. And then it'll have a small little line saying co-insurance, right? That co-insurance means that the buyer is liable for a piece of the building, right? And that hurts.
Not their unit.
Yeah, it's a piece of the building, not just their unit, a piece of their building, right? So the insurance companies don't really like that because it's more liability, right? It's more liability on the buyer's shoulders, and it makes it harder to finance because you have to take into account all the fees and the extra stuff you might have to pay, like God forbid, like a hurricane comes through and knocks down a piece of the whole building, and that 100% co-insurance, bites you in the butt. You know what I mean? Because you
Right.
gotta come out of pocket for that instead of just for your unit.
Now, does that mean that the association underinsured? Okay,
Yeah.
because that I've run across, that they underinsured a property and didn't cover all of the properties,
Yep.
or like you're saying, they're putting that burden back on the
On the buyer.
buyer, the owner of the unit.
Yeah. And you'll see a lot of condos for sale now more than ever, I think, in my opinion, because those insurances with the current owners are hurting. They are hurting because that 100% co-insurance, instead of having a walls in policy for maybe like $1,000, for a condo they're paying 2,000, two and a half. You know what I mean? Like it's unreasonable to be paying so much in insurance for a walls in policy. You know what I mean? So it's definitely gotten easier, but there's definitely still a ways to go. Okay.
Okay, well, I think that pretty much covers it for today. Nice, sweet,
Yeah.
and short. So, if you want to provide your contact information.
Yeah, absolutely.
And when you send me that condo list,
Mhm.
we'll make sure that we share it with all our agents.
Yeah, absolutely. My number is 305-300-2837. You can contact me anytime. Give me a text, call, doesn't matter. I'll pick it up. I'll probably think you're a client at first, but then, after we get off, after like that little laugh, like, oh, okay, you're a realtor. Like, we'll figure it out after.
Okay, very well.
And then also, remember we do flyers. Ask me to do a flyer for you. I go to your open houses. Just hit me with any questions you may have. Of course, down payment assistance options, just to go over them again. Hometown Heroes, the 5K grant. We have an AMI program, which if you're under the 80% AMI, you get up to 15K.
AMI is what?
It's a area median income.
Area medium income. So where the person is
Yeah,
gonna
so-
buy is very important to
Right.
see if it qualifies for that.
Right. And then conventional 100, FHA 100, right? The only one that hits for closing costs is, of course, Hometown Heroes, right? You get 1.5 towards closing costs if you do FHA. And then there's actually a program called SHIP right now that gives you between 40K and 70K.
Right.
Yeah, but the only thing is it's a little bit more lengthy and a little harder to get into than Hometown Heroes, because we just lock you in because we do all the work for gathering the information. But SHIP is an actual government program that you have to submit like a little paquete, and then they give you the approval in 2 to 3 weeks, and you get between 40 and 70K. And it does come with rules, like you can't take equity out of the property as long as you live in it, like as long as you own it. I mean, so that sucks. But I mean, if you're looking for your forever home, like I've closed a couple of SHIP program deals and it works for them, that's fine. But if you have a buyer that's going to invest in something in the future, another property, and wants to take out money, that's definitely not the one for them. So, but definitely, those are selling points, no money down and goes towards closing costs and all that good stuff.
Okay, so to kind of recap, the SHIP is somebody that has to stay basically with the life of the loan, but if for whatever reason they sell the house, they have to pay it back, right?
Yeah.
Okay.
Or it'll get refinanced and so on.
Or get it refinanced and just do away with the debt.
Yeah.
But isn't Hometown Heroes similar to that?
Very similar, yes. And Hometown Heroes doesn't have restrictions, but the bad part is obviously it's just limited time only. It's like, but the SHIP doesn't run out. It's
Mm.
actually been out for a few months, and we got approved with it now and had a few closings with it already, so we're pretty familiar with the process.
Well, that's another reason to use First Origin Mortgage Lenders.
Yeah.
With Austin Palacios and the founder of your company,
Yep,
Ray
Ray.
Palacios, and of course they're related.
We're brothers. No,
Yeah.
just kidding.
I think you'll like that if you say we're brothers. Anyway, well, thank you so much for coming in again.
Yep.
Austin comes to our office 2, sometimes 3 times a week. He's only 3-4 blocks away from here.
Mhm.
And he likes coming here because it's quieter to do business.
It is a little quieter. And me and Marlene have great conversations too, and it's always fun being around her. She's such a amazing person. I'm so grateful to be working with such an amazing team that Marlene provided for
Thank
me.
you. I
So,
appreciate your help. I appreciate you. And hopefully more business will come our way very, very
Absolutely.
soon. So, oh, one last question. Is it true that interest rates are expected to go down even more in September?
Yeah, absolutely. So they're looking to do the rate cut by 25 or by 50, depending on how they want to structure it. If they do a full 50, I don't personally foresee them cutting again in December, like they're saying. But if they cut by 0.25 and then they cut by another 0.25, like in 2 separate months, then it's fine. But and supposedly September is like 100% certain there's going to be some type of rate cut. And then if you follow the 10-year treasury, it's
Mhm.
basically what we kind of go off of. If you add 3 to the front, it's about what the average rate on the market is at a regular bank.
Okay,
It's
so
been trickling down.
it's gonna be more affordable.
On your iPhone, it's called TNX.
ENX.
Yeah, so I don't know if you can
Yeah,
see
you can
that.
say it a little bit. There you are.
Damn. But like you can see it's in the red, it's going down. So
It's going down. Well, that's good. That'll motivate more people to buy because it's not about the price per se, it's about the interest rate.
right.
What do they say? You
Date the rate. Marry the price.
marry the price.
Yeah. And
Yeah.
hopefully we can do some Ask the Lenders too. I know we were talking about it a little bit.
Yes, yes. In fact, we're going to go ahead and start doing that on Fridays in the month of September.
Yeah.
So we'll make it a TGIF happy hour as the lender.
Yep.
But you can only have a drink after you finish explaining everything.
Yeah, just gather up all your questions. If you don't want to just text me them separately, because I'll answer your questions like that too. But you know, we'll handle them on Fridays as well.
Perfect, perfect. Okay. So thank you so much once more, and we'll see you next week, okay?
Thank you.
Appreciate it, man.
Thank
Thank you.
you.